Hey, my name's James Wilkinson. Welcome to my YouTube channel. Now, interest rates are due to be discussed tomorrow by the Bank of England. Are they going to go up? Well, I'm going to give my thoughts on it in this video. But before we jump into that, I'd like to ask you a favour. Now, we're growing this channel. We're on a journey to 5,000 subscribers at the moment. We've currently got 3,000 subscribers. Help me get there. 70% of you watching are not subscribed. So smash that subscribe button very quickly. Hit the bell notification. We're also trying to get 100,000 views on the channel. We're currently at 50,000 views every month, which is absolutely insane. How can you help with that? Smash the like button over there, guys. That'll take you 2 seconds. Do it now. Smash that like button, and then we'll jump into the content. Ready? Cool. So interest rates are due to go up. Now, interest rates have been rising over the last year because of inflation. And so inflation was caused by so many different things. One was obviously the pandemic. That shut China down. Shipping rates from China went through the roof. I think they went from something like $2,000 for a container to like $20,000, which meant that the goods in the container, which is the stuff that we buy, was more expensive. Or maybe it's not the stuff you directly buy. Maybe someone needs those bits to put something together or to run a factory or do something over here, right? There's so many things that are related to that. The Bank of England has printed so much money for things like bounce back loans and all of these sorts of things, the furlough scheme and stuff like that. And it obviously can continue. And so prices are going through the roof. Now, here's a little bit of good news. So last month, inflation was at 11%. The data's just come down. And this month, or November, it dropped to 10%. That's good. Still very high, right? But that's going in the right direction. So that will be something the Bank of England will be looking at. Now, I've been reading some articles this morning, and a lot of people are saying the bank just can't keep putting up rates because we're already starting to feel the pain. Now, we somehow narrowly avoided a recession. Everything says we should be in a recession, but October we had some growth. So that means we're not going to be in a recession at the very earliest. Officially, technically, what you call a recession is 2 consecutive quarters of decline. So now we can't be in a recession until like spring, which doesn't really make sense to me, but that's where it is, right? So we're not going to officially be in a recession, although things are going to be very, very tough. Right, that's for certain. So why is it difficult for the Bank of England to raise the rates as much as they might like to? Because what they normally want to do is when you have inflation, you raise the rates higher than inflation. So now we're at 10%, you'd whack it up to 11%. That would push things down. This inflation isn't caused by the consumer. In times gone by, it's been caused by consumer. Now there's things like the energy and stuff like that because of the war. Lots of different factors that are out of our control. So they've got a slower approach to this. Now, things that are going to make it difficult for them are the house prices have already started to drop, right? We've had 2 back-to-back interest rate drops. And one thing as well is obviously consumption is starting to slow down. So we're on the way to a recession. We've very narrowly missed that off. Now, there's obviously other countries that borrow money from us and America and stuff like that. And there's a real concern that some of the developing countries are going to start defaulting on their debt. They don't want that. And if that happens, that will have a impact on a global recession as well. Stock markets are tumbling around the world. They haven't been doing well for a year. And so all of these factors make it difficult for them to have a rise. Now, the analysts are saying that they believe that tomorrow the Bank of England will go up 0.5%. That's what the Americans are likely to do today. The Federal Reserve are likely to put their rates up by 0.5% today. So what do we think? Where do we think that interest rates are going to go tomorrow? Comment below, guys. Then we can check tomorrow, see how many of you are right. It's a little game. So comment below and let me know, what do you think the Bank of England are going to do? Now, the Americans have been quite aggressive with their rate rises. They are seeing bigger house drops already than we are. That happened in 2008 as well. The Americans had a way bigger decline. Places like Florida were massively hit. I'm going to go out on a limb here. I think, and I'm no analyst, I could be wrong. I think they're going to do 0.25% tomorrow. I just think that there is some positive signs. Stuff that they've done is starting to work. We've gone down 1% with inflation. We may go down some more. There are other outside factors like energy costs are getting significantly cheaper. And so not in our pocket, but the futures market. So the price that the energy companies are paying today that we'll see later down the line, they're dropping. And so they are buying energy significantly cheaper now. And Ofgem and all these other people will force that through as a discount to us later or early next year. And so that will bring down inflation again. So I think that we could be looking at a 0.25% drop in this meeting tomorrow. And that's what I'm hoping for. Now, regardless of what's happening, is we're already seeing mortgage providers drop rates this week again. So interest rates on the products that you buy, because they were all flustered. And so when we had the mini budget, they felt that the base rate was going to go up to 6.5%, meaning we'd probably pay 8.5%. Now it's looking like that we'll peak out in 2023 with a base rate of 4.5%. We're currently at 3%, right? So we're at 3%. So if we're up 0.25% tomorrow, we're not far off that 4.5% now. We're quite close to that. So what's happening after the mini budget? Banks freaked out. There was so much uncertainty. The pound was really, really shrinking in value. And so they just put some high rates out there for people that just needed a mortgage. So they had a product on the market. Now they've evaluated that. They're getting more competitive. And in the last week, like I'm saying, rates are going down with mortgage providers. There are better, more competitive deals than there were at the beginning of the month. And so that is a good sign. And that shows that the banks that have way more inside information than we do and way more risk management, they're not expecting huge rate increases to this 6.5%. They're quite comfortable that it's not going to go above this 4.5%. That's a good indicator for us. Now, when we do go into recession, officially, which won't be till next year now, but when we do officially get into that recession, what will happen is interest rates are likely to get dropped then. That's normally how you get out of a recession, is that you will drop the interest rates. And hopefully this all coincides at the same time, right? So this is the best case scenario that we want to happen, is that inflation will start dropping maybe to 5% by spring. And then once we're in that recession officially, then hopefully we can drop the interest rate slightly to get the economy going again. That's what we really want. That's our best case scenario. Might not play out like that, but that's what we really want to hope for, is the inflation starts dropping significantly. Their target for inflation is only 2%, right? Is only 2%. Now, those of you that have got a lot of debt at the moment, your debt is kind of getting eroded by this high inflation as well, because you might owe someone 100 grand, but the 100 grand is worth less. The spending power of that 100 grand is really only £90,000 because everything that's gone up with inflation, right? So if you have a lot of debt in these times, particularly mortgage debt, it's not necessarily a bad thing. It's not necessarily a bad thing what's happened here. So I think it's interesting. I want to see what's going to happen tomorrow. I'll be interested to see what the Federal Reserve do later today. And you should be checking that stuff out too. But do put a comment. I want to get you guys involved and let me know, what do you think interest rates are going to go to tomorrow? Do check out all the other content. As soon as the interest rate is announced, we will do a video on the channel. So check out that. We'll give our thoughts and analysis on that, what it means for property investors. And at the moment, I just don't think that that interest rate rise, whatever it is tomorrow, is going to have a big impact on actually what your mortgage rate is going to be, unless you're on a variable rate. I think the deals are already priced in tomorrow's rise, and so we're not going to have a big change. But let me know what you think. Do check out all the other content on the channel. We've got 200 plus videos now on all sorts of things that you can learn about property investing. Give me a like if you didn't earlier. And if you didn't earlier, guys, 70% of you aren't subscribed, but you're regular watchers. It's easy. You just take that finger out, smash the subscribe button, hit the bell, then I'll stop going on about it. And then we'll get to the 5,000 people. We've got more than enough of you here watching this video right now to hit the 5,000. That's it from me. Go and check out all the other content on the channel, including this video right here.